Well, good morning, everyone. Welcome to our Tuesday morning trading session. Hang on here just a second while I get you my monitor. I notice there's a few new people in the room this morning. Welcome. For those of you who don't know me, my name is Eric Senft. I'm going to be your host slash guide slash teacher, whatever you want to call me. Guru works. I'll also answer to King. All right, what you're looking at here is the DTS system. And just really quick, I've got my Hawk scalper here in the top left, Falcon Swing Trader on the top right, Eagle Trend Trader bottom left, and the Raptor on the bottom right. The charts I'm following here are the NASDAQ. I've also got crude oil and gold up. And the market's just open. Bear with me here a second. I've got a little technical thing I need to deal with. I just need to reply to a Skype. All right, sorry about that. Okay, so the market's just opened up. Let's take a look here at the Eagle on the NASDAQ and see what's been going on. And you can see we're kind of waffling a little bit. Yesterday was very much a range-bound day. That's not to say it wasn't a profitable day. We had some pretty decent swings, you can see. And then we left off right around here, around the whole 43, 34, 35 area. Fairly quiet through the Asian and the overnight. And here we are opening with what appears to be a little bit of a gap. So we've got a little bit of a gap down here. We'll see whether or not the traders try to get into that. It's still a little early, of course. We're just a couple, 3 minutes into the session. So no point in getting too excited just yet. We've got a macro pullback signal here. This is starting to look a little bit like a bear flag to me, though. Not to say the buyers can't push up. Now we're getting another macro pullback. Notice how we're starting to fade a little bit here. And like I said, it's still early. If you're going to take that macro pullback signal, I would suggest a relatively deep stop and definitely go all in, all out. Maybe even dial down the risk amount a little bit. All right, well, we'll put that back up on the shelf for now. Gold very sideways this morning. Here's gold on the Falcon. And they opened up way back here. And very much like a roller coaster. Not really getting a whole lot of traction just yet. Yeah, I'm not quite sure what to make of this. Our late filter entry signal was spoiled by the trend line going out of sync here, but it is only out of sync for a bar. You may choose to ignore that little red section of the trend line. Try to go for it anyway. If you do, it might be one that you just want to put a onesie on. Can I risk it down there? Oh, I can. This is kind of testing the waters, see which way the wind is blowing on this market. Now, normally with the late filter entry signal, we don't want to see this trend line change color at all. In fact, that's what gives this signal its strength. However, as you start trading the late filter entry signal a little bit, you're going to encounter these times where the market just goes out of sync for a bar, which is what's happened here. Well, technically, I guess it went out of sync for 2 bars. And what happened is this bar right here traded a tick or two too low, and that ended up spoiling the bar or the trend line. But normally the late filter entry signal looks like this, where the trend line does not go out of sync. The filter does go out of sync, and then, very important, it has to come back into sync. We generate a signal, and that's normally a high probability signal, certainly high probability enough to hit our high probability target, although in gold I do tend to stretch the profit objective. So with the double profit objective, this one does look as though it may have come up a little bit short. Might have got enough out of that to hit the break-even trigger. All right, so we'll just let this one simmer a little bit. We'll put it away here. Crude oil just put in a little bit of a rally. And here on the Falcon, we had a nice trend change signal. So notice the trend line changed color from red to green. We have that characteristic up, down, up pattern, and then we trip with a signal. Everything is in sync. So we've got red, green signal, green bars, green filter, green trend line. And here's this little up, down, up pattern that we like to see. This shows us that the buyers have enough force to change the trend line color. The sellers try to push the market back, but fail, and then the buyers come back and actually print a signal. And that one occurred nice and early as well, which probably accounts for some of that extra follow-through. Okay, the NQ heading a little bit lower now, trying to get into that early morning gap. We did get a green bar sell here on the Eagle, and what I would probably do is it going to let me in? There we go. What I would probably do, because this signal was against the ATR, I would probably allow the ATR to flip over and use this next bar as my signal bar. Now, there is a chance here that the market's going to find some support on the way down, but currently we have our retest, and it looks as though we're going to at least try to get into that gap, maybe get down here to this 33, 34, 35 area, which was kind of problematic for us yesterday. Come on. Come on, let's get a little follow through. So here's that buying support off of the trend line. Buyers coming in a little bit early. Let's take a look where we're at our support and resistance suite. We're just trading right around the median line. Took a nice bounce off the primary resistance. Equally nice bounce off the primary support. Working on a trend change signal now with the Falcon. So here was a very nice trend change / late filter entry signal. This is how they normally work out. This is why it's such a reliable signal to take. Okay, well, we're going to try to ride out that swing, getting now a first micro macro cross for those of you trading the hawk. You know what? The signal's going to print right here. 1, 2, 3 for 3 ticks. I can take it a little bit further below that other swing low. I think I'll set it up like that initially. And now as it's trading a little bit higher, I'll start to roll in my entry. And what I could do, because again, this is still very early in the session, is if they allow me, I'm going to change that just to a single contract, just to reduce the risk. And what I'm going to do is if we fill, I'll open up this target. We'll delete the profit objective. And see if we can't run it out a little bit. No, not yet. Working into a macro pullback. And we'll adjust the entry. No, adjust the entry again. Oh, and now we're into yellow bars. The yellow bar spoiling the signal there on the hawk. We'll see if it goes into a green bar sell. There we go. There we go. Boy, oh boy. Just chasing this one higher all the time. Okay, so we still got the green bar sell signal, although this is really starting to look like it's going to work itself into a first micro macro cross higher. Oh, thanks, Derek. Derek says the Dow is up strong, 136. That is a pretty good session. We'll see whether that's going to spill over here into the NQ, or whether we'll be able to steal a few dollars on the way down. Now it's up 144, he says. So here's the mini Dow. And this is what Derek's referring to right out of the gate. Big rally up. And of course, the stock indices do have a tendency to move together for the most part. I'm still going to try to run this one out a little bit. This is really the last chance for the sellers now. If they lose their grip, it's probably going to be time to exit. And what I'll do is I will bring this stop in a little bit tighter. So we're just above the primary resistance line at 43.55. Oops, let's lock that. There we go. For those of you looking to buy, this is not a first micro macro cross signal, in case you're wondering. The macro line is not in sync yet. Yes, we produced a signal. Yes, technically the micro and macro lines have crossed over, but everything is not in sync. Oops. Not that that mattered, eh? They just decided to give me a little bit of a whipsaw on that. All right, well, at least we've got a bit of an idea which way the market wants to go today. It does seem as though the buyers are in control. That's why that first trade, very often you don't want to get into it too heavy. Absolutely, Paul. Paul asks Eric, he says, good morning, Eric. Or in my case, good evening. I know you also watched the 6B. Could you show us how you would trade it? Yes. Let me just get the 6B up here. That's the British pound. For those of you unfamiliar with the symbols on some of the markets. Okay, I just need to let it finish loading and then I'll bring it over. Yes, and Derek's in the room, so he's, I think that's one of the markets you follow, isn't it, Derek? The pound? Derek likes to trade the overnight markets from North America. Yep, he follows the pound. All right, so here's the British pound. And the first thing that I do when I put a new market up is I take a look at how the brick size is with the market. Now, what I've done here is I've actually loaded it onto the chart with the alternate brick size. Let me also load it onto my standard brick size chart. And what you're looking for is you're looking to see that there's a reasonable amount of room between the session breaks. That's these vertical lines, so that you have an opportunity to actually take some trades. And just scrolling back through here, it looks like I've got about 2 or 3 screens worth of trades, which is more than enough. In fact, it's making me wonder whether or not I should go to the stock settings, and we'll check those in just a second. So here now is the British pound on the regular 6-tick brick. So here's the session break. We'll go back a little bit, and yeah, it looks like the regular brick size would be adequate. The only time you want to go with the alternate settings is if your chart looks like this, where these session break lines, obviously you're not getting very many trades within each day. These are supposed to represent 24 hours trading. But it looks like the regular brick size would work just fine for the British pound. All right, so, oops, sorry. Let's clean this up. Okay, so Paul asked, how would you trade it? Well, I'm assuming you're in the European time zone, or the overnight time zone anyhow. So let's take a look at what's been going on in the overnight. So Europe opened, London opened for me right about here. And right out of the gate, or just before the open, we got a first micro-macro cross signal. So just like the other signals, I'm always concentrating on finding the highest probability signal. And, you know, I'd be looking at the first micro-macro cross. Here's a macro pullback signal that gave you a little bit of heat. These yellow bars I would ignore. This first micro-macro cross lower you have to be careful of. Why? Well, because when you're looking at this chart, we're having a little bit of an uptrend, aren't we? And yes, it's true, the market has broken the trend line, and it may well be reversing, but we don't know that yet. We won't know that until the market makes another lower high and just continues to trade lower here. So if you're going to take this first micro-macro cross on the hash mark, you pretty much have to try to risk it above the swing high. Alternatively, you could give up a couple of ticks and enter below this swing low. That would enable you to run a slightly tighter stop. The logic is that once the momentum comes back into the market, if we take out these lows, we're just going to keep going. We're not going to look back too far. So in this case, well, now it's into yellow bars, so that voids the trade on the hawk. And now we're looking at another first micro-macro cross slash macro pullback. But you see what we have happening here is we're almost getting this bear flag type shape to it. Whenever the market is bunching up like this, it seems to me have that bear flag flavor. So the logic would be the same. I don't necessarily want to enter right on the hash mark. There's the macro pullback signal. I don't necessarily want to enter right on the hash mark. Maybe I want to take it below this low. If I do take it on the hash mark, if I think that low is going to be too far away, same thing, I want to try to risk it above the high. The reason being, okay, the market brings me in. If it retreats and gets above this high, then I know I'm definitely on the wrong side of the trade. When the market recommits to the downtrend as it has done here, well, I can take my stop from up there and I can start to bring it down. So, and as we break this little swing lows, I can start to bring it down a little bit further and hopefully see it trade low enough to get to my profit objective, which it did not. Hopefully it hit the break-even trigger there. All right, so there's the hawk. The only difference with trading the full brick size versus the alternate setting And the alternate settings are 4-4-6. That's a 4-tick hawk, 4-tick falcon, 6-tick eagle. Is you're going to produce a few more signals. So here's that first micro macro cross to the downside. Oops, one sec. Here's the first micro macro cross higher. So macro pullback. So you can see still valid signals, but you're going to get a few more of them. So it pays to be choosy. Let's put that up on the shelf, and I'll bring over the Falcon now. Here's a good point. Derek says he prefers the 6E over the British pound, and they're both trading the same tick value now. So let's take a look at how the day breaks shape up here on the Falcon. That's not bad. That's about as the minimum I would expect is about a screen width. So that's 1 day. That's 2 days. Yeah, okay, so it seems like the standard size is working for us. And let's just take a quick little look here, make sure we're not missing anything on the NASDAQ. No, not yet. We're still good. All right. So here, let's take a look at this day right here. Out of the London Open, we've got a trend change. So the trend line goes from red to green. Note the trend change pattern. We've got the up, the down, the up. Everything is all in sync. We've got green bars, green filter, green trend line, green signals. That would be a buy signal for us. And here we had a real quick trend change signal. Let me show you this one. This is actually a pretty good example of a quick trend change signal. This trend change signal, we refer to it as an early trend change signal, and you shouldn't fret about missing these because they do occur rather quickly, and the only clue you have that the market may actually fulfill that signal is this little test of the extreme. The test of the extreme, the retest of the high and the failure, but the signal itself prints just as the trend line starts to change color. However, you will always have this pattern preceding it. Always, always, always. That did have good follow through, but like I said, you shouldn't beat yourself up if you missed it. And the rest of the session looked to be a little bit choppy as we got into the North American trading hours. The reason I say you shouldn't be upset with yourself if you missed that is you would have gotten a signal on the hawk. You would have gotten a signal perhaps on the eagle. We'll take a look here at the eagle in just a second. That's why we've got the three tools. If one of the tools isn't picking up the signal, then chances are very good we're going to see it on one of the other two. Okay, we're getting a macro pullback signal here. We've drifted back into the trend line. I'm not going to go with this macro pullback signal just yet. And we'll take a look here at the eagle on the British pound. Oh, so you see how the session break lines are here? That's starting to get a little bit cozy. It's okay if it happens once in a while. You know, there's quiet days. Yeah, see, this is starting to get a little bit tight. I might actually dial this down from 12 ticks to 10 because there's no opportunities here. You see, I would be watching this. Here's the London Open. Okay, no signal. You could make a case that this is a rule of three type signal and perhaps catch that decline. But here's the day before, no signal on the eagle. Okay, well, obviously it's not a trending day. This is a decent trending day though, the day before. We did get a green bar sell, but I do believe if you go to a 10-tick brick, this will be a little bit more obvious than it is here on the 12-tick eagle. Yeah, I used to follow the British pound a little bit in the room as well, just for a different market to keep an eye on. Paul asks, I read in the manual that you recommend a trade target of 4 ticks on the Hawk and 8 ticks on the Falcon. No, that's not the target. The target is a dollar amount. Your target is always a dollar amount. And then you'd need to convert that dollar amount to ticks depending on the instrument you're trading. So for instance, we've got a $50 target for the Hawk. So you take $50, and with the British pound, it trades at 6.25 a tick. So that's 8 ticks to get to your $50 target. If you were trading the E-mini, which trades at $12.50 a tick, or twice as much, then you would have a 4-tick target. If you're trading crude oil, which trades at $10 a tick, you would have a 5-tick target. The Falcon, we have $100 profit objective. So your profit objective, $100 divided by 625, is 16 ticks. So that would be your high probability target for the Falcon. And then of course it doubles again for the Eagle, or 32 ticks. If you happen to have the Raptor as well, with the Raptor it would be the same as the Falcon. So it would be 16 ticks. All right, so we're working a late filter entry signal here on the Falcon. Oh man. This was a macro pullback. I was scared about the downtrend, and I chose not to take it, but it did hit the profit objective. Good morning, Jim. Jim providing some advanced decline numbers. This morning we've got just over 2,000 on the buy and 700 on the sell. But remember, we had that opening gap, which is going to skew things a little bit in favor of the buyers as far as the advanced decline is concerned. Okay, so far, though, the market definitely seeming a little bit bullish. Okay, now we're starting to top out. So here on the Raptor, you can see we've got a nice little double top right at the high of the morning. I'm looking for a soft edge sell now, and perhaps move back to the trend line. We don't have a warning dot yet. Two macro pullback signals. Remember, macro pullback signals, when they start to produce one after the other, that is a sign of weakness. Okay, now we're into yellow bars. So that's going to void any attempts to buy, and it actually casts a much more bearish flavor on the market. We did get the soft edge sell signal right here on the Raptor. I just punched in a sell market order. And stops will go above the high. And we'll see whether or not we can't get this trade to get down here to the 43.50-ish. Oh, nicely done, Jim. Jim bagging a couple of ticks on the Russell real quick. Shorted the YM at the YM. He said the Russell's selling off. Shorted the YM at 88, now to 77 on 2 contracts. Nicely done. Good job. Come on. Come on down. This double top that we have here, that should be enough to put a little bit of heat on the buyers. In spite of the decent rally we saw this morning, I think we could see it slip a little bit. Okay, here's the red bar buy now in the hawk. Now the red bar buy is a signal we can take with trend, or sometimes it's easier to take it on the failure. So we would be looking for that signal to break down. And we would sell it below the low of the pattern. Now, you don't always need to trade a red bar buy or the inverse, the green bar sell. You can simply use them as an early warning, in which case we would anticipate that this is signaling the end of the uptrend, and we may see a first micro-macro cross lower. If prices continue to dip. Come on. All right, well, we'll let that sort itself out. See, here's the problem. We're into the hard edge. We're very close to the hard edge on the Eagle and on the Raptor. And whenever the market encounters the hard edge, we always anticipate a reaction. Now, in this case, I am getting a little bit more committed to the short side. We've got a trend change now here on the Falcon. We're back on the primary resistance. So we would be looking for the signal to generate and a break here of the primary resistance. We would expect the market to move at least one zone. However, very often it will move 2 zones. So 43.47 would be the first target, and then 43.39 would be the second, if we end up producing a sell signal here. Well, good morning, William. William says, good morning. Day off today. Just had DTS installed yesterday. Well, good for you. But watched way too many previous free room videos. Yeah, I think Adam's got quite a few at the YouTube channel. For those of you who don't know, Indicator Warehouse does have a YouTube channel. So if you ever need to rewatch one of these videos, or if you think you missed something and you'd like to see it again, you can. This should be uploaded in the next day or or 2 at the most. So we're starting to produce a warning dot. Oop, there goes that green dot again. Darn it. I thought we were going to get our sell signal and that the sellers were going to step up, but no, not yet. The buyer's not leaving it alone. And in fact, doesn't this look a little bit now like a bull flag? Getting a lot of sideways trading going on here at the moment. All right, well, we can scrub that order. Really? Is that all you're going to give me? Is that all the sellers got? Welcome says, I may be wrong, but I think Adam actually asked me to stop watching. Yeah, I know. There's a lot of information out there. Okay, so William asks, I assume the angle of the flags, bull or bear, make a difference. Yes, generally speaking, and we'll use the raptor here. Oh, okay. All flags have to be preceded by a trend. Without a trend, they are not a flag. Flags can be large and they can be small, but flags are often referred to as pullbacks because that's what they do. They pull back against the trend and they usually form a tight little channel like this. So in a bullish market, the flag will look like this, and we would anticipate the market to resume the trend and head higher. In a downtrend market, the flag would look like this, and we would expect the market to resume the trend lower. So when we produce a signal that breaks outside of this flag, we would at least anticipate that the market's going to try to retest the lows. So if we were doing this real time, and I don't know what I was doing when this signal was going on, but it's a pretty decent signal, we would anticipate that the market would try to retrace down to here. That would be our ultimate objective. We're also running high probability targets, however. So the market comes down here. It looks as though it might have hit the high probability target. Even if it didn't, it starts to reverse. We need to start doing something with our stop loss, which would probably be up here. But in this case, the market just continued going higher. But that's what we would anticipate with these bull flags and bear flags, is that there's going to be some sort of follow through. So now we're retesting the highs, and see, we have this uptrend, and you could either consider your bullish flag like this, or you could even make it a little bit bigger and say it's more like so. That is an acceptable flag also. The idea is that the market trends, it drifts sideways, we anticipate the trend to resume if it gets outside of this trading range. But we're getting a lot of sideways trading here at the moment. You can see all this here just kind of moving sideways. Is the hawk into yellow bars yet? Yes, it is. That's characteristic of a sideways market also. Our filter is starting to break up a lot. Let's see what's going on the Falcon. The Falcon usually sees the trend line turn into a roller coaster. The filter's starting to break up, but not too badly. No, they're going to keep pushing. There they go. There they go. So I have a bad feeling I was just not able to hang on to that long enough. Oh, well done, Jim, knocking it out of the park today. He said he went long on crude oil at 6 and out at 17 on 2 contracts. Look at you just scalping away. Yeah, Jim says oil and the stock market seem to be running in sync today, and they certainly do, don't they? There is some selling going on up here. You see, every time it breaks the high, we get a reaction. That's why I wasn't keen on buying into it. And I thought my short would last, but I should have kept my stop a little bit further away still. Because it is not uncommon to see the market just drift through a resistance area or a support area by a couple of ticks. So we had one leg higher, 2 legs higher. Our legs are starting to drift sideways though. You can almost see the momentum leaving. Okay, here's another soft edge sell off of a retest of the high. Yes, I'm stubborn. I'm going to try it again. I'm going to try to leave my stop a little bit further away this time. So we've got the test of the extreme. We've got the soft edge sell. And yes, I'm being extra stubborn this morning. I'm sorry. Come on. Boy, the market's quiet this morning. Okay, now we're starting to get a little follow through, and I'll show you how to put the ATR line on your Eagle chart in just a second there, William. Let me get to this trade and see if we're actually going to get a little bit of follow through on this one. Oh my gosh, come on. You guys, you're killing me here. Okay, we're going to put it right there. Where's my resistance line? No, that's right on the resistance line. Look at that. They just keep hitting it. 43.62 3/4 to be technical, but we're drifting as high as 43.64. It's probably a little bit of a reaction to that 43.65 area. All right, so William asks, how do you get the ATR line on your Eagle chart? Right-click on your indicators, and then what you want to do is you want to scroll down to all these indicators that are marked IW, and you're going to see one that says IW TM ATR trail. Now it's actually part of your trade manager. Double click on that. It's going to appear in your assortment. You don't need to do anything else to it. Just click apply or OK, and voila, you'll have the ATR line. Now, if you'd rather not have the ATR line on there, you can also go to your trade manager and you can set your ATR stop strategy at 2, and that will give you the same kind of look. That was actually suggested to me by Mike Filigera. He's the fellow who uses the DTS system for the stock market, for trading the stocks. And, you know, my rule for adding anything is always, does it help you make a decision? If the answer is yes, then by all means keep it. And if the answer is no, well then get rid of it because you don't need it. Okay, we're producing a couple red bar buy signals here, and as I mentioned, these tend to develop near the end of the trend. So we did get a failure of a red bar buy right here, so you could already be short. We'll see if this red bar buy gives us another signal. No, that one disappeared. Gold prices slipping hard. Crude prices making a rather substantial decline, getting all the way back to the hard edge. Where we should anticipate some sort of reaction, and that does not mean that crude will head higher again. It's just that they are slipping a little bit. I would like to see crude rally a little. Ay, ay, ay. So we just hit the primary support. I don't know if you noticed that. Here we are on the, or pardon me, the primary resistance on the support and resistance suite. We're working that trend change signal again. Actually, I'll hold out for this one before I go back to the Raptor. We're getting the warning dot. I'm ready with my signal. Come on. Yeah, I know. Jim says, I went to get a coffee and I come back and oil's down 50 cents from the double top. Oh, I know. I know. It's happened to me too. Oh, all right. Well, they're just kind of hovering there. Keep bouncing off of that primary resistance line. The hawk becoming a little bit more bearish now. We're working on a first micro-macro cross signal. We don't have the signal complete yet. Waiting for that macro line to come into sync. And just an awful lot of overlap. Oh my gosh, this is brutal. There we are. Except for the rally out of the gate, we've been stuck sideways for the last 30, 40 minutes. Yeah, Derek says, nice drop on gold. I saw that. I just reloaded my gold chart. And nice trend change, late filter entry signal, back to back. A couple of chances to get short there. And here come the buyers again, just to thrash things about a little more. Well, I guess we'll just stay with the Raptor trade here. We're getting yellow bars again on the hawk. Green dots on the Falcon when we're expecting red dots and a possible sell. Yeah, I'm not a fan of the sideways market, but buyers and sellers both very happy with the Nasdaq right now, trading at around 4360-ish. Well, it looks like the only way to bring this market down is for me to actually buy it. Oh man, some days. Speaking of crude oil, first micro macro cross in crude. Problem with this signal is trying to cover it. Can't afford it up there. So can I get in a little earlier and maybe ride it to there? It's a tight trade. And now that we're watching crude oil, they've stopped moving as well. 43.90 is the hard edge on the Eagle. So we drifted down to the hard edge. That's where we're producing our first micro macro cross. Let's put this away. No need to apologize, William. That's why we're here. William says, my apologies for all the interruptions and questions. Not at all. Ask away. But he says, I just bunched up my chart and it looks to me that we are in an overall uptrend. Yes, you would be correct with that. If we take a look at the Eagle, which tends to have a little bit more condensation to it. Oop, wrong way. Yes, there you go. You are absolutely correct. The market is in an uptrend, but I know, like I said, I'm being especially stubborn today. I try not to come into the trading session with a trading bias, but for whatever reason, I've got it stuck in my head today that the market should be trying to retest the support at any rate. We've got this leg up here, and then we've got a couple more legs up, but the momentum seems to be waning a little bit. You see how we're just kind of drifting sideways here? A couple days ago we had a decent move higher, but since then we've been in a sideways drift. And what tends to happen is that when the market goes into this sideways drift well, sometimes it will resume the uptrend and other times it will reverse on itself and head lower. But you're right, it is technically still in an uptrend. Oh, darn it, they just tagged me again on the high there. I'm not normally this pig-headed about stuff, but sometimes. Tony says, don't be afraid, sell. Are you buying the other side of my order, Tony? All right, so crude oil, the hawk short that we were looking at had retreated from the signal, never engaged it. Now we're into yellow bars, so you can cancel that. well, the Raptor gave us a hard edge bounce, as did the Eagle. All right, we'll see whether this drifts now into a macro pullback. And that's here on the Hawk. And everybody's sort of quiet now across the board. Ah, nicely done, Jim. Jim knocking it out of the park with the mini Dow. He says he went long on 88 and out at 99 on 2 contracts. Hold on a second here. So quick little scalp for Jim. So long at 88. Scalped out at 99. Yeah, the YM, the mini Dow. Nice progression today. Not quite as choppy as what the NASDAQ has been. Okay, I wonder whether crude is actually going to commit now to the downtrend. We are getting a trend change signal. It may also be a late filter entry signal. See how we're just getting the beginnings of it here. We don't have the warning dot yet, but if this bar trades lower, we should see a warning dot form, triangle hash mark probably somewhere near this swing low, and that will likely also bring back the filter, bring the filter into sync. Sure. Elmer is asking a question. Could you quickly explain the symbols such as NQ, GC, 6E, and all that? Are these related to the broker you use, by the way, which is your broker? Well, I'm in British Columbia here, and it's a long story about the brokerages. But first, let me deal with the symbols. We've got the market symbols are the market symbols. These tend to be universal. So what you're going to do is you're going to go to your NinjaTrader, and you're going to type in whatever market you're interested in. Say you're interested in gold. Oh, okay, sorry. Wrong section. Description. Let's go on this side. Gold. And these are all the different gold markets that you can trade. Now, the standard market, like the COMEX, which is the big one, is going to be GC, and that's pretty much going to be universal. Some of these smaller ones, however, like the electronic gold futures, the mini gold, these are sometimes broker specific. But at any rate, it's going to be in your assortment. Same thing if you go for something like soybean oil. Soybean oil always used to be BO, bean oil. But here on NinjaTrader, the electronic version is ZL. For you Americans, that would be ZL. But the big markets, like the E-mini, that's always going to be ES, crude oil, always CL. The futures versions of the currencies, this is pretty much universal also. So the Aussie dollar is 6A, the British pound is 6B, Canadian dollar 6C, the euro 6E, the yen 6J. Some of the big markets will also have, oops, sorry, wrong one. Let's try this. Some of the big markets, the Euro FX, so foreign currency exchange, this is the futures version, the 6E. There's also a mini euro, which is the E7. I hope that's not too confusing. Same thing if you go here into the yen, because it's a larger market. You've got the 6J, that's the futures. The J7 is the mini yen. So if you're trading on a budget, you can follow those. If you're ever confused about a symbol or something, just ask your broker or shoot me an email. I'd be happy to answer the question for you if I can. After that, it's just a matter of memorization. So after a while, you get to know that the mini Dow is the YM. In fact, a lot of the markets, which are the mini markets, begin with a Y. I don't think you need to worry too much about finding a whole lot of markets to trade, especially when you're starting out. I think you want to focus on one or two markets and kind of get to learn the flow of those. You wouldn't know it from this morning, but the NASDAQ is usually a pretty good market to follow, as is the mini Dow. The NASDAQ does tend to have a little bit more volatility to it. Yeah, so Elmer, with the Forex markets, it's going to be a little bit different because the Forex are always pairs. So Elmer says Forex at the broker here simply says Euro EUR GBP. So that's what you're doing is you're crossing the Euro with the British pound. So 1 second here, we'll get the instrument manager. So you can see here with my a couple of the Forex crosses I have, I've got the Euro-Yen cross, I've got the British pound US dollar cross. In the futures markets, the 6A, 6B, 6C, 6E, 6J, all those markets are crossed against, or they're paired against the US dollar. So the 6E is going to be exactly the same as the EUR USD. There are some euro crosses that you can get on the futures market. Where are you? Here. Here's a euro-yen cross. So it's crossing the US dollar, the euro against the yen. It's more of an interest type thing anyhow. But if you wanted to do, like you're suggesting, the euro against the British pound, you're going to do euro. Actually, you could probably do it here. EUR GBP. There it is. So there's the currency cross, the euro against the British pound. And let's see if I have that on my data feed, and I'll pull it up here for you. We'll see if it loads. Now, I'm not knocking the Forex, but I think dollar for dollar, you get more value for your money trading futures. And I'm not trying to talk you into anything or talk you out of anything. My big problem with trading the Forex markets is the spread. You know, most people get into Forex because they say, oh, well, it doesn't cost me any commission. Oh, it costs you all right. You just don't see it, because the commission is hidden in the spread. So here's the euro British pound cross. Looks like the signals are actually printing pretty decent. Oh, that was a very late first micro macro cross, and this is going to answer Tony's question. Tony asked nuts and bolts question on the NASDAQ hawk. What is it missing that keeps the hawk from not printing the first micro macro cross signal? Sometimes the market is just moving too fast or too slow. There's a lot going on behind the scenes here. There's actually about a half a dozen parameters for each of the birds that have to be met before you even print a warning dot. So if one of those 6 parameters are not in sync, you're not going to get the warning dot until everything is. So sometimes when the market is moving especially fast or especially slow, you won't get that signal to print. It's rare, but yes, it can be terribly annoying. So just looking here at the euro pound cross, it looks like the signals are unfolding rather quickly. Yeah, you still have about a minute or two to make a decision here. If the signals unfold too fast, I'm just looking here at the timestamps. If the signals unfold too quickly, you may have to increase the brick size a little bit, just to condense it and slow it down a little bit. Because sometimes you need a little time to look at this and say, yeah, okay, that's a red bar buy, but I haven't had the test of the extreme, so yeah, I'll go ahead and maybe buy into it. Now you're also going to need to adjust your quantities for your Forex, and you can do that in your trade manager. here, quantity round divisor. Right now it's set at 1. You're probably going to want to round to the nearest 100 or at least to the nearest 1,000 depending on what kind of quantities you're trading. But it looks like it's a fairly steady market. But like I say, my big beef with the Forex is the first few ticks you're going to owe to the broker. And if the market's more volatile, they increase the spread so that they earn more. And if the market's less volatile, they decrease the spread. Sure, it costs you less, but the market's not going anywhere, so you earn less. I think you're better off trading if you're interested in containing your risk and controlling your risk exposure, the flexibility that you have in something like the Forex market. You may want to look at some of the ETFs, especially the SPDR. It's a stock derivative. It's an ETF, but it allows you total flexibility in planning your trades. So for instance, a macro pullback signal right here. And let's say we're going to enter there and we're going to cover the trade right down here. Oh, actually, let's take it down here below the swing and the macro. Woohoo! A whole $1.07 on a single contract. So this is, like I say, it provides you with the ultimate in flexibility. Let's say we dial that up to 100 contracts. That same trade, those same parameters would cost me $100. That's the kind of flexibility that the Forex gives you, but you can also get that on the ETF markets, and this market is huge, and you don't have to deal with that annoying spread where the broker takes all your money. Commissions are fixed for ETFs, and personally, I like knowing what it's going to cost me to take a trade. I'm not, like I said, I'm not knocking it. If Forex is your bag, then by all means, stay with it. Yeah, so Elmer asks, so the difference is whether it's a futures or a real currency pair. Yes, the 6E is the futures contract of the Euro-US dollar pair. All right, folks, I've got an appointment at the top of the hour. I've got to meet somebody online, so we're going to close up the room here. Now, I know I've been talking about shorting the market all morning, but, well, I'm going to keep my mouth shut. I'm still a little bit bearish on the market. I don't think we're going to see a full-on bear trend develop today, but we have seen a rather prolonged move to the upside, so I would be a cautious buyer. Again, it's not to say they can't go any higher from here. They certainly can. They've accelerated quite nicely throughout the session. But I think, for the most part, I'd be a little bit leery at this point, especially since it looks like we're starting to drift a little bit sideways again. All right, you guys have yourselves a good day, and we'll catch you tomorrow. Oh, quick reminder, tomorrow we're in the open house trading room. We're in the free trading room, so we'll see you guys then. All right. Talk to you tomorrow. Bye for now.